The Santa Claus rally was rejected yesterday, but things are still looking pretty bullish as we see prices drop. We could be getting a bounce up soon. Let's take a look at Matic and see where we could be going next. How's it going, everyone? My name is Jake with Trade Confident. Today, I'm going to be talking to you about Polygon Matic. Now, as you know, this is one of my favorite coins for 2023. As soon as the bull run starts, I think this coin is going to do amazing just because of the tons and tons of big money backing that Matic has. Today, I'm going to give you a full overview using technical analysis and the Trade Confident indicators of where I think it's going to go next. But first, I have to let you know that the indicators you're about to see me use are on sale. Biggest sale of the year. You only have 2 days left to get them at this crazy price. I'll tell you more later on in the video. For now, let's jump into the analysis. Right now, I'm looking at Polygon on the tradeconfident.io website, scrolling down here to check out the emotional index first. We can see here that the emotional index for Matic has fallen into fearful territory. Typically, when the markets are feeling a little bit fearful, this is when big money is going to be buying it up. Typically, fearful readings happen after price drops and people like to buy the dip, but this is also where we're going to be seeing peak FUD, fear, uncertainty, and doubt. So often, this is where smart money is going to be buying. Next up is Polygon long versus short trades. Now, this is an interesting one. We have actually seen an uptick in short trades as of recent times. We can see that actually pretty much directly correlated to a drop in the price up here. We'll have to see how long this continues. It looks like long trades are starting to see a small uptick right here as well. So it's very likely we could be seeing at least a little bit of a level off soon. Possibly sideways movement, and we'll have another metric later on to check that out. Next up is Polygon smart money. As I said earlier, smart money is going to be buying the dips as prices fall. They have likely honestly bought the dips right here and are probably about to do it again at this point where we see these small dips and moves up. In fact, the moves up are probably caused by whales buying the dips at those points. We can see overall there is still long trade sentiment in the market, although it is somewhat diminishing, so we'll have to keep an eye on that. Overall, I still think we could see some small moves up. This is that metric that I was talking about, the breakout detector, that's going to tell us whether or not we're going to be seeing sideways or more volatile movement. When the green bars are under impulse, it means we're likely to see big moves in the market. When we see the bars above consolidation, we're likely to see sideways movement. Now, what I'm seeing right now is kind of in the middle, pushing towards consolidation. We saw that start pretty much as soon as the price completely dropped. It's been moving pretty much sideways ever since, although it is a slight downtrend. I think this is likely to continue, and since the bars are in the middle, I think it could be a little bit of a volatile sideways movement, but a sideways movement nonetheless. Next up, we have the Polygon major support and resistance levels. Now, as in the name, it's going to tell you exactly where the support and resistance levels for Polygon are. 76 cents right here is going to be strong levels of support, and you're going to see that directly correlated on the 4-hour time frame later on in the video. Last but not least, we have the Polygon daily trade scanner. Now, we got a buy signal fairly recently. The price has moved down a little bit from that level and currently is sitting at structure support. This is a pretty bullish looking movement. This is a lot of bullish sentiment because the top and bottom finder, or the daily trade scanner here, is telling us it is a good possible point to buy. This is a few days ago, of course, but the price is still at the same level, a little bit lower, so I would still consider this somewhat valid. The metrics are showing me fairly bullish pressure in the market right now. I think we could be seeing small moves up. I don't think it's going to be anything big anytime soon. Right now, whales are just continuously buying the dips, and we're seeing little kicks up in the market because of that. I think that'll probably continue through the end of December, and after that, we'll have to see what happens. I want to take you to the 4-hour time frame to get a closer look at what Matic is doing, but first, I have to let you know that the indicators you're about to see me use are on sale, the biggest sale of the year, up to $450 off all 11 of Trade Confidence indicators. If you want to get access, the first thing you got to do is click the indicator link in the description. It'll bring you to this page right here. You guys got about 2 days left. What you're going to want to do is snag our bundle pack for $50 off using code HOLIDAY50. This will give you access to 9 of our indicators, including the trend exhaustion and price versus well money flow that you see me use in all my videos. On top of this, it'll include a $400 off coupon for the TC top and bottom finder. Overall, this is a $450 savings. If you want to get the top and bottom finder by itself, use code HOLIDAY350 and it'll give you $350 off. Don't take it from us. These indicators really work. This person made $10,000 in their first 3 days, $4,300 in just a week, $5,000 in 2 weeks. People are doing absolutely incredible despite the bear market with these indicators. Again, if you want to grab them, links are in the description. Let's take a closer look at Matic. Right now, I'm looking at Matic on the 1-day time frame. I just want to let you guys know that the price versus money flow and trend exhaustion are very low on the 1-day time frame here. Trend exhaustion is pushed into the bottom red territory, and this is typically when we're seeing moves up, especially when the price versus money flow is low. You can see right here is a perfect example. Price versus money flow is low, almost to the point where it is now. Trend exhaustion is low. We saw a big move up. We're also seeing that the trend is diminishing on both the trend exhaustion and price versus money flow. We're getting lower highs as this descending triangle pattern happens as well. This means there is less and less momentum happening as we get in. Less and less trading volume means that we are likely to break out soon. That is what causes these descending triangle patterns. And again, I should also probably note, right here, it's a descending triangle. We have a horizontal support structure with a descending resistance line, both converging right about this point. This gives us plenty of time. The convergence happens on January 8th, right about here. So we have plenty of time for the price to move in and out a little bit during this time. I don't think it's going to last too much longer. I think we're going to see a breakout very, very soon. We'll have to pay very close attention to the indicators to see which direction it's likely to break out. Triangle patterns tend to be continuation patterns, so it's possible that we are going to see a move to the upside. We're also seeing whales accumulate quite a bit, so it's very likely they're going to pump the price after December, and we could see bulls take over. On the 4-hour time frame though, things are looking a little bit more uncertain. The price versus money flow is at a value of 39, while the trend exhaustion is in the middle of its territories and moving down. We're still seeing that diminishing return, the lower highs right here and right here. Again, I think this is what's likely going to cause the breakout to happen soon. As the trends get lower and lower on their charts, it gets more and more likely for the overall trends to reverse. And I think that's what we're going to be seeing soon. I think it could take probably to the end of December for this to happen, but I think that right now the price versus money flow and trend exhaustion are going to fall and bottom out as we touch this support structure at 76 cents. There's that 76 cents again from the support and resistance metric. Overall, I think what's going to happen is we're going to bounce off that support structure and climb again to meet structure resistance. We have two of them right here, right at about 82 cents. We have a horizontal resistance structure and that descending structure. I think we're going to see the price move up to about here before we can decide whether or not we're going to break out. If we get to this point, that 82 cent mark and the price versus money flow and trend exhaustion are low on their charts, that is very likely where we're going to see a breakout to the upside. If we do end up breaking down, nothing's completely certain, so I do want to let you guys know 71 cents is the next structure support for Matic, but I think the next move is down to 76 cents and then on back up to probably around 82 cents through the end of December. That's my prediction for Matic. Thank you guys so much for watching. We really appreciate it. I have to let you know one more time, indicator sale ends in 2 days. It's the biggest sale of the year. So if you want to get access for the best prices we've seen on these indicators, be sure to click the link in the description below. Remember, trade safe, trade confident. I'll see you in the next video.